All right, good afternoon, guys. How are we doing today? If I can get a quick audio and video check, let me know that you can see my screen and that you can hear me and that we are coming through loud and clear here. I sure appreciate it. That way we can get moving forward. Just want to make sure that we're all up and running here. Let's see here. All right, perfect, guys. Thank you very much. I appreciate that. Well, I hope everybody had a great weekend, and looking forward to a short holiday week here. We'll have a short trading week getting ready for Thanksgiving. I hope so. Happy early Thanksgiving to everybody. Hope everybody has a great time with friends and family and loved ones. And if you'll be traveling and out there on the roads this weekend or this week, definitely be careful. It's one of the craziest, busiest traffic times of the year, at least down here in Texas it is. You don't want to be on I-35 on Wednesday or Sunday, trust me. It'll take you forever. So appreciate you joining us today. We're going to talk a little bit today about a question I get a lot of. And, that's, hey, I'm new to Nadex, or even, hey, I've been trading Nadex for a while, but which one should I trade? What should I focus on? Should it be binaries or should it be spreads? Or I'll talk to some people and they'll say, oh, I'm a Nadex binary trader. Or other people say, well, I'm a Nadex spread trader. And you've heard me say before, I like to say, well, I trade Nadex. I trade them both, all right? And, I can't sit here and tell you that one is better than the other in general, all right? But there can be times, with whatever strategy or system you're trading or with certain market conditions where one might be a better, option for you than another. And so I just want to, and we'll talk some more about this, in some upcoming webinars, but I just kind of want to set the stage here for you and set the foundation of some things to think about when you're trying to figure out what is better, a binary or a spread. Okay, and I want to talk about a few times and a few examples of, when you might want to choose one over the other. All right, so we're going to talk about that a little bit today. Let's get our disclosures taken care of here. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. All the information here in this webinar is for informational and educational purposes only. Also, guys, if today I'm showing you a chart or talking about, different options of trades or entering a trade on a demo platform, that's in no way a trade recommendation or trading advice. It's me just simply helping you visualize what it is I'm trying to show you. And as always, trading has risk and past performance not indicative of future results. So if you are brand new to Nadex, hop on over to nadex.com. You can get some great information here about who and what is Nadex. Basically, Nadex offers two different products. They offer binary options and spread options. And that's what we're going to be talking about today is, different times to when one might be better for you than another, perhaps. We're not going to spend a lot of time going through all of the basics today. If this webinar is over your head at all or you're brand new and still trying to figure out some of the basics, go right over here to Learning Center. You've got some great information over here with webinars and videos. And if you click right here on webinars, you'll see right here the webinar we're on right now, okay? These webinars are recorded, and this is where they're placed. If you go, well, right here, if you click on upcoming webinars, it'll show you all the upcoming webinars. That way you can get signed up, get registered for them, get reminder emails. But if you've missed any webinars or want to go and get a ton of free education, go right here to On Demand, and then come down here and find me right here, John Skelton with Apex Investing, okay? And this will be a recording of a ton of past webinars. And there's everything in here from, the very basics of spreads and binaries 101, and then we build on that of, spread basics. Do you really understand risk reward with spreads? How to trade news events, how to pick the right spread. A ton of information in here for you. If you've missed any past webinars or if you're new and want to dig in and get some more info there. Here under trading platforms, I want to bring your attention right here to demo trading platform. If you don't have one of these, get one right now. Nadex will give you a free $25,000 demo account. All right, you just fill out some quick information and hit open, and you'll be able to log right into the Nadex demo. And it's a great place to, get familiar with Nadex, how the platform works, how the different products work, check out the different, binary contracts and the different expirations and strike prices and opening tickets and entering and exiting orders. Great place to just get familiar with the platform, work out any kinks or mistakes with your demo money, not your live money. But also a great place to practice some of the stuff we're going to talk about today. Let's say, for example, that you're a binary trader and you've been trading binaries for a while. You're not really familiar with these spread things, okay? Well, continue what you're doing. Keep trading your binaries in your live account if that's what you're doing. But whatever strategy or system you're trading, when you have a setup and you enter your binary trade, also have up your demo account and enter a spread trade, okay? Or vice versa. If you trade spreads, enter a binary trade. See how they both work, okay? And compare the two at the end with your strategy and system, and then go back and look at your results. Keep a trade journal. Take some screenshots of your chart of, okay, hey, I entered here because of this. Here's what my binary did. Here's what my spread did. Which one would have been better? Why did that one turn out better or worse for me? How can I use that information for the future? Okay, so it's a great place to put to use a little bit what we're going to talk about, today even. Okay, so make sure to take advantage of that free tool with Nadex. My name is John Skelton. I'm with apexinvesting.com. The webinar today is brought to you and hosted by Nadex. We appreciate them having us. Apex, we're a group of traders helping traders. We're an online education company. We have, live trade rooms and strategies and systems and indicators. A lot of our strategies focus on risk management and probability. That's why we love the capped risk products of Nadex. And we're traders just like you. We trade Nadex binaries and spreads literally every day. I trade them myself literally, every day. And I've been with Apex now for about 5 years as head of operations. I've got a background in banking and as a licensed stockbroker. But what we're here for is, Nadex does a great job of providing their members with a lot of free tools and free education. We're just here to help you understand who and what is Nadex. What are some ways that, just to share with you, what are some ways that we trade them? And, to help give you some ideas of how you might be able to incorporate them into your own trading as well. Okay? So we're going to talk a little bit about some of the differences between binaries and spreads. We'll talk a little bit about, some of the differences of risk and reward ratios, the expected moves of the market, and kind of comparing the benefits and the trade-offs of each one. All right? Like I said, we're not going to be covering the basics of what is a binary, what is a spread. So, if you're not quite up to speed on that, you can go where I just showed you there under the on-demand webinars and catch up on anything, okay? And this webinar is being recorded as well, and it will be placed under those archive section also, all right? So let's talk about the benefits of a binary, okay? And like I said, we're not going to get into a ton of, basics here, but, what is a binary? Well, it's simply just a statement, right? This particular binary contract right here says the US Tech 100 will be greater than 6671 at 2 p.m. And it's just simply yes or no. It's binary, right? Yes, no, 0, 1, true or false. It will happen or it will not happen. If I think that statement is true, I might be interested in buying that contract. If I think it's false, I would want to sell that contract, okay? But one of the big benefits of binaries, okay, and we know that at expiration, a binary is either worth 0 or it's worth 100, right? If I buy it and the statement is true, then the contract's worth 100, all right? So whatever I paid for it, the difference of what I paid to $100 is my profit. Or if I'm wrong, it's worth 0. For example, if I had bought this one here, then my risk, would be $45. My maximum profit would be $54. Okay, so it's all or nothing at expiration. But now, what is the benefit to a binary? Well, a slow move in the market, even just a tick or two, can possibly create very large profit percentages, right? And when I say a tick or two, even 1/10 of a tick, okay, could be the difference of at expiration of it expiring in the money or out of the money. for example, with the example we just looked at right here, okay? If I bought this and the market expired at 66.72, okay, just 1 point, 1 tick above, or one point above where I bought my strike price, then it would expire profitable, right? Just 1 point could be $54 of profit, right? Okay, but if it expired 1 point below, it could mean a loss of $45, right? It's all or nothing, okay? Now, but if there's not, but if there's not a big expected move of the market, or there's not a big move of the market, I could still profit quite a bit, because all I need is it to expire, what, 1 tick above, right, or 1 point above. So I don't have to have a big move of the market, okay? And a lot of part-time people might prefer binaries. There's 5-minute binaries, there's 20-minute binaries, there's binaries around like 23 hours a day on the forex. It's very fast-paced trading, right? You might love it or hate it. Some people love those 5 and 20-minute binaries. Some people hate it. It's just too much, right? Too much on the heartbeat, right? And you have to understand the difference between out of the money and at the money and in the money binaries, all right? And what I mean by that is there's all kind of different binaries in here, right? You can see binaries here. This is the offer side is the price you can buy them for. The bid side is what you could sell them for. You've got very low risk binaries. You've got binaries kind of right in the middle, priced around 50. And you've got in the money binaries in the 60s and 70s and so on. So you have to understand, what binary is going to, be best for the strategy or system that you're trading and for the current market condition. All right. But it doesn't take huge moves of the market to potentially have, a very high profit percentage. All right. You have to understand the different binaries to make sure you're picking the right one. You can hold the binary all the way until expiration, or you could scalp it. You can exit early. All right. For example, let's just say as an example, I had bought, this binary right here. Okay. And I bought it for $48, $49. And the market starts to go up and it's going in my direction. Okay. And, now the binary's, worth 50 and worth 59 and worth 65 and worth 72. I can exit right there. I don't have to hold it until expiration. Okay. I can exit early, whether the binary is going in my favor or going against me. All right. I don't have to hold it all the way to the end. I can get in for, 50 and get out at 75. Okay. So I do have options there. All right, which is great. And so that's the big benefit of a binary, is just even a small move in the market, that gets me above my strike, especially at expiration, could give me a very nice profit percentage. Okay. But what's the downside? Well, just 1/10 of a tick against me at expiration, and the entire thing, is worth 0. Right? So if I'm not, expecting a big move in the market, a binary might be, the way I want to go. I'm just looking for it to stay above or below my strike, right? Depending on whether I buy or sell. I don't need it to go hundreds of points in the direction. I just need it to stay above where it's at, right? So in that case, a binary might be very beneficial for me. Now let's talk about spreads a little bit. Now with spreads, you have to make sure to not think like a binary trader. It's not all or nothing based on 1/10 of a tick, right? The way spreads work is, they're $1 a tick based on where you get in and where you get out, okay? So, and just like everything with Nadex, whether it's a binary or spread, everything has a capped risk. And you know this risk ahead of time. Before you even press enter, if you want to consider buying it and you click the buy side, it'll show you your max loss is 135, your max profit's 115. Okay, over here, max loss, max profit. You know that ahead of time before you place your order. Now, something we have to make sure to clarify here is there's a very big difference, okay? If I'm looking at a binary, okay, and it says max loss, all right, whatever this max loss number is, at expiration, this binary is worth 0 or 100, meaning I could lose that $55 right there just based on one tick or 1/10 of a tick, right? Okay. So when it says max loss here, just a 1 tick difference could be whether I'm going to lose 41 or make 58, all based on 1 tick. Where does it expire compared to my strike, right? But when we're looking at spreads, okay, when we're looking at spreads, that doesn't mean the same thing here. When this says max loss 135, that's not based on 1 tick, okay, difference. All right, spreads work differently. They're $1 a tick, $1 a pip. Okay, so for me to lose $135 on this spread, it would have to go against me 135 points, not just 1/10 of a point. Okay, so everybody, that's a very important key that you have to make sure you understand when it comes to binaries and spreads. All right, that you can't let this max loss number right here control your emotions or control your decision on what you do, because they work differently. Okay, if I'm trading this binary, okay, quick question here, see who all is paying attention or fully understands. If I trade this binary and the market expires at 66.62, meaning it goes 1 tick against me, all right, I have a full loss, correct? Everybody agree with that? Okay. Now, if I'm trading this spread and it expires 1 tick against me compared to where I bought it, how much do I lose on the spread? I bought it, it expired 1 tick below where I bought it. How much do I lose on the spread? If it goes against me, it expires 1 tick below. Yeah, I lose $1, right? Because that's $1 a tick on a spread. Okay. Also notice, just in these examples right here, that look at this maximum profit, $115, $131. Okay. What's my maximum profit on this binary right here, for example? $50. No matter what, the most a binary can be worth at expiration is $100, right? It's either 0 or 100. I cannot make more than, it cannot be worth more than 100 at expiration. Okay? So if I'm only expecting a small move, right? Let's say, just as an example, okay, again, this is not a trade recommendation. In fact, we might be, it looks like we're actually looking the opposite direction here, but let's see here. Right now, the market's at 66.55, and this says 66.63. So let's say I'm only expecting like, a 10, 15 point move in the market. Well, that's all I need, right? I just need it to stay above this strike. And with a small move of the market, I can have this contract that I buy at around 50 be worth 100. And that's a good return, right? And I only need just a small move. Okay? And with that small move, I could make about $50. If it went 15 in my favor on a spread, how much would I make? Well, about 15, right? So with a shorter term move of the market or smaller move of the market, I do have a higher potential profit, a higher profit potential on a binary with a small move. Everybody understand that? As compared to a spread. But I do also have an all or nothing type situation, right? Okay. But if I'm expecting a big move of the market, the most I can make on that binary is 50. On this particular spread right here, it's 115 or 130. There's some other spreads out there that you can make several hundred on. Okay? So does everybody understand that kind of basic concept there of, hey, a smaller move in the market could potentially give you a bigger profit potential in the binary. But just one tick against you could be all or nothing on the binary. With the binary, you're capped at $100 value. On a spread, you might be able to find a spread that could give you several $100 potential profit. Okay, so they both have their pros and cons, right? Oh, hey, the market went against me 3 pips. I lost everything on the binary. I only lost $3 on the spread. Ooh, I like spreads. But you reverse that. Well, the market went up 5 ticks. My binary won, and I made 50 or 60 bucks. I only made $5 on the spread. Ooh, I like binaries. Okay, do you see the kind of the pro and cons there, the give and takes there? Okay, so you can't say that one in general is always across the board better than the other. All right, you have to look at, your particular strategy or system. Are you trading a scalping system, or, just going for a few ticks? Are you trading a longer term trending system? What fits your strategy and system better, the binaries or the spreads? But you also have to look at the market, and you kind of, also have to let the market tell you. Like I said, don't be confused about max risk. Just because a spread might have a higher max risk, that doesn't mean all or nothing at expiration. Okay, you can exit early for one, but for two, it's $1 a tick on that spread. If you have a $200 max risk, that's not all or nothing at expiration. The market have to go against you 200 pips. Okay, it's about max risk versus realistic planned risk. You can exit early if the market's going against you. Okay, just because you have to tie up a little more out of your account and put more up out of your account to get in that spread trade doesn't exactly mean you're risking more. Okay, I mean, let's just say, for example, that I was trading, the Dow. Okay, well, I am here, and I'm looking to buy, and I have to put up $200 for a spread. Okay, well, if I'm wrong, I bought thinking the market's going up. If I'm wrong and the market starts shooting down, am I just going to say, oh, I was wrong, and let it go 200 points against me to lose it all? No, I'm probably trading a strategy or system that has exits, right? That tells me to manually exit. Hey, we think it's long, but if it went short against you 30 points, get out, right? Okay, so I had to put up 200, so it's technically a $200 risk, but if it went against me, say 25 or 30, I might get out. So what did I really lose? What is my realistic planned risk? Well, 25 or 30 bucks, right? Make sense? Okay, so let's look at a couple things here. Okay, what are some ways to potentially, let me give you a couple of examples. It's like I just told you here. If it's just going to be a small move of the market, but I expect it to stay above this level, the binary might be my choice. But what if it's a big news event? Or what if it's, a big expected move, and I expect the market to go up, 100, 150, 200 points? Then I might want to be in a spread, right? I might want to consider finding a spread that's got, a good amount of room to the floor or ceiling to give me as much possible as I can of that move. Okay, that's when I'm looking at the market and I'm looking at my strategy and system, and I decide, okay, binary or spread, that's normally the first thing I'm looking at is what's the expected move. Okay, because each one gives you an edge. The binary has certain edges and benefits. the spread has certain edges and benefits. So which one gives me the best edge, the best risk to reward with this current market condition, right? Where is my target? Okay, that's a big thing. Where is my target? You know, and for example, let me bring that. Let's see here. All right, well, let's just look at this. Okay, let's look at this chart right here. This is the current chart right now of the Dow. Okay, so you know, if I had, let's just say, for example, and notice, guys, these blue lines on here, these are apex diagnostic deviation levels. Okay. And again, I'm not giving any trading advice or recommendation here. I'm not looking at all my charts, and you know, I'm just giving you an example here. But one thing that I do like to trade or like to look for in trades is consolidation. Okay. Notice how the market's kind of been in this big consolidation range right here, and I like to draw chop boxes. Okay. And then when the market breaks out of these boxes, I like to look for, you know, at some of my other indicators for momentum and, you know, high volume and all kind of stuff. So let's just say that the market broke short and I had confirmation of a little bit of volume short. Well, where is my expectation of movement? Where is the next support or resistance level? Where's the next Fibonacci level? Where's the next EMA? Where's the next deviation level? Whatever it is you trade with, right? Well, for me, I'm looking at this -2 deviation. That's the first one that I see off the top of my head, right? Well, and if I'm waiting on a break here, okay, I'm expecting this level to be my first level of where it could go and where it might hesitate and either reverse or hesitate and, you know, fight there for a minute before it goes down, or fight here for a while and go back into a big chop like it's doing here. So I don't have a whole lot of room there, do I? Right? I mean, I've got a little bit of room, but it's not a huge amount of room. I mean, what are we talking about? We're talking, let's say I don't get the breakout here till like 9:15 and it's down here at 879. So I mean, it's still 45 points. I mean, that's still a good little move there, right? But in that case, I might be interested in looking at a binary, right? So if it breaks out right here, you know, if I can get a binary, let's just say I get an at the money binary right here. So I risk about 50. Okay. And all I need the market to do is stay below that area between now and expiration, right? Let's just say it happened now. Obviously it hasn't, but it's what, 1:30. Let's say I get a 2 o'clock expiration. So I see it breaking out of consolidation with momentum, with strength, with volume. And all I want to do is just have it stay below there for the next 30 minutes until my expiration. You know, I need it to stay below the strike. I'm expecting it and hoping for it to come down here and kind of sit and kind of chop in here and just let time go by to my expiration. Or I could say, all right, it broke out. I want to do an in the money binary up in here. I want to give myself even more of an edge, right? Like it was in this consolidation box. It broke out with strength. I'm going to get a strike way up here just to give myself some more room and insurance and just let time go by until expiration, right? Or I could do an out of the money. There's several ways to do that. But does that make sense? Where I don't necessarily have a huge, you know, amount of space between the breakout and my next level. Does that make sense, everybody? And not just you know, oh, in general, I get, you know, what a spread and binary is. You kind of see that from like a strategy point of view as well of, you know, the consolidation, breakout with momentum. Where is the next level that I would expect it to go to? Where is my target? Where's my first target and second target, right? Now let's look at it a little differently. Let's say that in this consolidation box, the market came to the top and starts building and it breaks out long with some strength. Well, let's say it breaks out right here about 25.050. Where's my first pretty clear in your face target to look at? Well, this deviation level. And not only is this the -1 deviation level, it's also kind of the last area of what? Of the previous kind of point of chop there, the previous support and resistance level, right? So that would be probably my first target. Now from here at 2050 up here to 25.165, that's 115 points. So that's kind of a big difference, right? Here we were looking about 40. Here I've got 115. So I would consider in that case, if I could, find the right spread, I might be more interested in a spread in that case. Can everybody see that? Can I get a quick show of hands? Does that make sense? Just in a live example right now, what's going on? I didn't scroll back and cherry pick something. This is literally live right now. Okay? And again, I'm not doing a trade recommendation here either way. Just because it broke out of this box short, like I said, I don't have all my momentum and volume and all that, so I'm in no way making a recommendation here. I'm just trying to show you a difference of a target that's close by compared to the next target that's got some room to move, right? And when I see that there's 115 points, yeah, I could still do a binary on it and be happy that the market shot way above my binary. And that makes me feel really good and a slow heartbeat about my binary, right? But I'm also limited to that max value of $100 as to where, I might could get 115 on the spread, right? So that is just an example there, a very basic example, live right now on the chart, of when is a binary better, when is a spread better, okay? So for me, that's the first thing I'm looking for, is where are we going, okay? Because when you're trading binaries or spreads, you not only need to know what is the market doing now, is this a trade setup? Does this entry follow the rules of my strategy and system? Is this a valid entry? Okay, but what's next, right? What's next? Where is it going? Where's my target, right? Especially if I'm a spread trader, but also especially if I'm a binary trader, because it's pointless, if I don't have an expectation of where it's going, but I just randomly choose one of these way out of the money binaries up here. Oh, look at that. I only have to risk $6. Ooh, I like that. I'm going to buy that. Why? Where is the strike? Or I'm sorry, I'm looking at the wrong thing here. Wall Street 30. Oh, look, $6. I'm going to buy that because I like that risk. Where is it at? 25.147. Where's 25.147 on this chart? Well, it's right here. Okay? So, yeah, that is potentially another thing you could do. You could not only do a spread, but you could do a low risk, out of the money binary, looking for that big move. And only risk 6, 10, 15, 20 bucks, looking for it to expire or move in value up closer to the $100, right? You've got options there, but you have to know which option is best for you. There might also be times where there's not a binary available at the level you want, but there's a spread. Or there's not a spread that you want with enough room in it, and a binary might be your only option, okay? So that's kind of how you break it down, or that's kind of the first couple steps there is what's the setup? What's the expected move? With that expected move, in general, what is my better option? Binary or spread? Okay, great. If my better option is a binary, now let me go over and check out what binaries are available. And then I'm going to have a reason behind choosing my binary, right? Meaning, okay, I think the market's going to go short. This one here looks really cheap because, you know, oh, I only risked 15 bucks. Cool, I'll take it. Well, wait a minute. Where's the strike? 24.823. Okay. Where is 24.823? Well, 24.823 is down here. Okay. See that? Way below our first target. So does it always make sense just to randomly take the cheapest one that's available? Or does it make sense to target a level that's on your chart and do what the chart's telling you to do? Right? Does that make sense, guys? Do you see that? I'm showing you live examples right now of, you know, things you would want to look for. Okay? So like I said, guys, we'll talk about this some more over some upcoming webinars and dig in a little deeper. But that's the first thing, is where are the targets? Which one's the best in general for me? What strikes are available? What spreads are available? And which one gives me the better edge, the better risk to reward, right? And then as I see the market, for example, getting up to my target, maybe I want to tighten up my manual stop, right? What do I mean by manual stop? Well, let's say it had broke long and I'm in a spread and I'm getting up into here. I might say, hey, I've made some good profit. If it comes back down to about right here, I'm just going to manually close my trade. I'm going to lock in some of that profit. Could it keep going up to here? Sure. Could it keep going up to here? Sure. Could it go to here? Sure. And what will you be saying? Oh, man, I should have left it open. I could have made all this. But it also could do what? Zip right back down to here, right? So I'm going to be looking to watch the market of what's it doing here. It got that level. Is it still strong momentum and strong volume like it wants to break and go to the next one? Okay, then maybe I'll hang tight. But if I'm just seeing exhaustion and absorption and rejection and divergent, I might just want to lock in my profit. Take the money off the table. What does the song say? Take the money and run, right? So guys, look at those kind of things. And like I said, if you're an existing spread trader, you don't trade binaries, pop a binary on in demo with your trade setup. If you're a binary trader and you enter one, pop a spread trade on, test them, kind of get an idea, get a feeling of both. That's what's great about the Nadex demo account, right? That's what's great about it. So, all right, guys, was that helpful in any way for those of you that might have been wondering, you know, when do I do one over the other? Does that at least help set an initial foundation of what to look for, of your targets, and kind of do what the market's telling you to do? I know we didn't get crazy in depth, and you know, but like I said, I didn't try to cherry pick a screenshot. I had some here, you know, in my PowerPoint to show you old examples, but it was like, let's just pull up a chart. And, you know, combining with all my other strategies and systems, that's what I would have been looking at in these breakouts, okay? And another perfect example, guys, what did I tell you earlier? I would not be looking short here just because the market went out of that box, right? Remember I said that. I said I'm looking at all my other stuff of volume and momentum and order. I want to see it pushing out with what? Strength. Because otherwise what's going to happen? Exactly what happened. Came right back in. Remember I said that, guys, right? And so I do love trading this way, looking at, I mean, you can just kind of see it on the chart here. I mean, you can kind of see it for yourself when it's in these ranges, right? And you kind of draw a box, right? And then when it breaks out of that, boom, what does it do? Then it goes to this other box, right? And then when it breaks out of that, boom, it goes in. I call it kinks and breaks of the market. Remember when you're a kid, you turn on your water hose and you kink it? What happens when it's kinked, right? Those hose starts to get bigger and like build up pressure and build up pressure and build up pressure, and then what? You release the kink and boom, it shoots, right? Okay. So that is, you know, and then we combine that with looking for that momentum, looking for that burst. All right. Robert says, what charts are you using? Robert, these, notice up here it says 2020 continuum charts. These are some proprietary bars that Apex makes, where each one of these bars is 20 ticks. Okay, like when a new bar is formed, it has to go down 20 ticks to make a down close bar, or up 20 ticks, just tick bars. Okay, and because of the way they, you know, they plot, it helps show me when it, you know, down 20 and up 20 and down 20 and up 20 and down. Helps show me chop real easy, right, Robert? Can you kind of see that, especially when there's like 4 or 5 together? Like you see that consolidation real easy, right? And then, you know, I'd be looking over at some of my other, you know, smaller charts. No, these are very different from Renko. We have some diagnostic bars, like you see here. These are more similar to Renko, you know, in the way these plot. And, you know, I use these a lot as well to help me spot, you know, some of those breakouts, along with some of our volume indicators and other indicators like that. You know, like, for example, when, you know, we see that, you know, the market's chopping on, you know, that other chart, and we can kind of draw that same chop on this smaller time frame chart. And then we look down here at some of our, you know, volume indicators, and to be able to say, hey, you know, we're pushing short, we're pushing short, pushing short, pushing short. Oh, but wait a minute. You know, so the volume's kind of in this area, but wait a minute, we start seeing volume breaking the previous volumes, getting bigger and bigger with momentum down to the short side as it's breaking out of the box. And then what happens? It bursts out, and a few other tools. So, and let me shrink it in. You can kind of see what happens. You know, without getting all technical and training course, do you see that? Okay, see this time frame in here? Okay, see that time frame in here? It's the same time frame. When I switch it over to the smaller chart, I see the pushes to the downside in volume. See where they're kind of small here, and then we'll look as they start breaking and getting big, and we see momentum coming in, and it breaks short. That's what I'm looking for, and you see what the market did. See that? I mean, we had a nice move, and it didn't go just to the first target. It went and went and went, right? So, anyway, guys. Hope this webinar was helpful, just at least give you a foundation of some things to look for, not just strategy-wise, but also comparing binaries to spreads. Appreciate you taking the time to join us today. I know it's a short week with the holiday. Once again, happy early Thanksgiving. Hope you all have a great one and a safe one. Hop on over to nadex.com and make sure to check out the upcoming webinars so that you can get signed up for those. And once again, if you go here to webinars, upcoming, we'll give you the upcoming webinars, okay? In fact, next week, I'm doing another one of kind of what we just went over, that the strategy I halfway showed you right there. I'm going to dig into it deeper right here on the 29th, trading key levels with Nadex binaries. I'm going to show you a little more in detail exactly what I went over there at finding the levels, finding the chop boxes, and how we look for the breakouts with volume. So if you want to hear a little more about it, sign up for that webinar for next week on the 29th. And have a great one. We will see you next week. Happy Thanksgiving, guys. Thanks so much. We'll talk to you later. Thank you. Bye-bye.